as we bring together thought leaders, experts, and visionaries to a very insightful and promising event hosted by 9Point Capital. We are extremely grateful for your presence and thank you all for joining 9Point Capital as we dig deeper into the evolving dynamics of investment and the ever-changing financial landscapes. To do this, I'd like to invite the leader and the visionary behind 9Point Capital, Mr. Srinivas, on the stage. His unyielding drive towards excellence is something that reflects through his words. Let us now put our hands together for Mr. Srinivas.
Thank you, Jasmeet. Very warm welcome to everyone here. Thank you so much for taking the time out and coming in this traffic. Mumbai has been fantastic. I'm from Delhi, but I find Mumbai to be very interesting for the last 1 year. So today, we're going to talk about a very special asset class, an asset class that's had a fantastic journey for the last 16 years, a journey that's been promising for many. It's been highly rewarding for a lot of people. It's been scary for a lot of people, but the journey is far from over. This asset class has a very long way to go, and today, by the end of this event, I really hope you are able to build that conviction to join this journey along with us, right? So just to pep up the mood here, I would like to start off with a small quiz. Let's keep it a little interactive, right? So if you look at, I'm sure you all are very proficient investors. What do you think are the top global assets by market cap? If you could get the, let us just list the first few of them, right? Does anyone know which is the topmost asset class? No, not asset class, sorry, assets. Yeah, the first one with the maximum market cap globally. No one? It's gold, right? Gold with a market cap of almost $22 trillion, right? Now, then in this list, there are a lot of companies now. So what do you think would be the second one? Any guesses? Come on, let's keep it interactive. Which is the most valuable company in the world? Apple, right? So Apple is worth around $3 trillion. Sorry, I gave out the third answer. So it's worth about $3 trillion. Now, if you see the difference between the first and the second, I don't think any asset would catch up to the number one position, right? It's almost $19 trillion of difference. Now, third, everyone would be, it's easy to guess, it's Microsoft, right? So Microsoft's asset market cap is about $2.7 trillion. Now, let's take a guess for the fourth one. Yeah, you guys shouldn't answer. Right, NVIDIA. Now, NVIDIA with a market cap of about $2.4 trillion is at the fourth place. Now, let's go to the next one. Any guesses? Come on, any guesses? Okay. Tesla? Okay, Tesla. Anyone else? No? The answer would be very surprising. This is the journey that I want you guys to take with us. It's Bitcoin. Bitcoin has a market capitalization of almost $1.8 trillion, and this is the fifth largest asset by market cap. Yes, of course, it keeps fluctuating depending on the price. It keeps, fighting for the position between Google, which is Alphabet, and Silver. So right now, at $93,000, it's overtaken Google, as a more precious asset, right? So that's the kind of growth that this asset class has given. And it's very surprising that we still think that it is a scam, it is a Ponzi scheme. So our intention today is to kind of take you guys through this real journey that this asset class has taken, and what is it really have as a store of value, and why is it that every investor should have a minimum exposure to this asset. So what we're going to do is we're going to run a small, not small, 8-minute video. Yes, it's a bit long, but it's definitely worth your time, because we're going to kind of give you a in-depth view into how this asset class came into existence, what's the kind of run it's had, what's the kind of viewpoints that the world had, and how it's been changing now. And then we'll take ahead with this sessions today, right? So if you can please play the video.
In 2008, the U.S. subprime mortgage crisis snowballed into a global financial catastrophe, leading to the collapse of Lehman Brothers and other major financial institutions. This sent shockwaves through the global markets, and the world economy came crashing down like a house of cards. The events that followed left millions questioning the stability of traditional financial systems and sparked a deep mistrust of centralized institutions. And owing to this crisis of mammoth proportions, Bitcoin was born in 2009. A pseudonymous inventor called Satoshi Nakamoto developed Bitcoin, an innovative, decentralized digital currency built on blockchain technology. Its creation was a response to the very issues that led to the financial meltdown: a desire for more transparency, security, and a system free from the control of banks and governments. In its early years, Bitcoin was met with skepticism, dismissed by many as an experiment or a bubble. The volatility was high, and public sentiment remained largely negative. But through the noise and doubt, Bitcoin's resilience prevailed. Starting at a price of $0.0009 in 2009, Bitcoin hit an all-time high of $109,026 in January 2025, fueled by Donald Trump's re-election as the President of the United States. Over the past 14 years, Bitcoin has grown at a staggering compound annual growth rate of nearly 167%, turning early adopters into pioneers and skeptics into believers. And over the past 1 year alone, Bitcoin has grown by over 100%, surpassing the 72% growth of gold and 11% growth of Sensex. Currently hovering around $85,000, Bitcoin's incredible growth is a testament to its potential. With a market capitalization of approximately $1.67 trillion, it has emerged as a global asset, trusted by millions and adopted by more and more institutions every year. Bitcoin's success has inspired the germination of hundreds of altcoins, and the explosive growth of altcoins, including Ethereum, Solana, and XRP over the past decade, has resulted in the digital assets market becoming a whopping $2.7 trillion industry. Even world leaders and leading nations are embracing the digital assets revolution. Donald Trump has time and again voiced his support, calling for regulation to ensure innovation while protecting investors. This push for clear guidelines is a huge step toward legitimizing digital assets on a global scale. Several countries are moving towards clearer regulations, paving the way for broader adoption and integration into the financial ecosystem. The growing market capitalization of Bitcoin, its broader acceptability, and humongous potential have attracted major global financial institutions to launch ETFs of Bitcoin. In January 2024, asset management firms like BlackRock, Grayscale, Fidelity, ARK21 Shares, VanEck, and WisdomTree launched 11 spot ETFs. Within merely 20 days following their market debut, they accumulated $10 billion in assets under management. Just after 7 weeks, BlackRock's iShares Bitcoin ETF, IBIT, hit an AUM of $10 billion on the 1st of March 2024, the fastest ETF to ever hit the milestone. These firms now have an AUM of over $95 billion and collectively hold over 1.1 million Bitcoin, 5% of Bitcoin's total supply of 21 million, highlighting their growing appeal to institutional investors and retail investors alike. The Ethereum ETFs that followed on the heels of Bitcoin ETFs have pulled in over $2 billion in net inflows, and soon several other altcoin ETFs are also expected to expand the burgeoning market. Wall Street titans are also betting big on digital assets, with Goldman Sachs increasing its exposure in Bitcoin ETFs to $1.27 billion, an almost 90% rise from its previous holdings in the past 6 months. If leading financial institutions are to be believed, then the future looks extremely promising for digital assets. The adoption of Bitcoin by global financial institutions has rubbed off on giant corporations as well, reinforcing the growing trust in the digital asset. It is increasingly becoming the preferred treasury instrument for corporates to park their investments. One of the first companies to acquire massive amounts of Bitcoin was MicroStrategy. In fact, the company invested in Bitcoin at a time when it was making last-ditch efforts to save its sagging fortunes. MicroStrategy's aggressive Bitcoin acquisition strategy transformed its market valuation from $1 billion in August 2020 to over $80 billion currently, earning it the reputation of a Bitcoin proxy. Its stock price when it purchased Bitcoin was $14, and now it is well over $300. Michael Saylor, the co-founder of MicroStrategy, revealed in an interview that Bitcoin acquisition was their ultimate decision to prevent shutting down of the company. He has even predicted that in the next 21 years, Bitcoin could reach $13 million. Taking cue from this remarkable growth, other corporations such as Tesla, Marathon Digital, Metaplanet, and Samara Asset Group have adopted similar strategies to reap substantial returns. Across the globe, there is a growing demand for Bitcoin and altcoins. In the US, Europe, and the Middle East, Bitcoin is increasingly being seen as a reserve asset. The US has established a Bitcoin reserve, which is primarily composed of around 200,000 Bitcoins, and President Trump has pledged to make his country a leader in the digital asset space by leveraging Bitcoin's potential as a strategic financial asset. While the world embraces digital assets with open arms, here in India, the path hasn't been as smooth. A complex tax structure and regulatory vacuum have instilled uncertainty in the minds of investors. A tax rate of 30% on any profits derived from the transaction of virtual digital assets and a 1% TDS have been a major detriment for investors. This is where 9Point Capital steps in. As India's first digital assets management company, we provide a safe, secure, and regulated rail to digital assets globally. We enable tax-efficient and seamless access to high-yielding, alpha-generating opportunities in the digital asset space for HNIs and ultra HNIs. Our team of experienced fund managers, financial strategists, and blockchain experts work around the clock, researching market trends, identifying high-performing digital assets, and managing risk, all while delivering optimal returns for our investors. At 9Point Capital, we take compliance and security seriously. Our operations are fully transparent and in line with global regulatory standards, ensuring your investments are protected. With 9Point Capital, you get more than just an investment platform. You get a partner that understands the complexities of regulated assets like Bitcoin ETFs, exchange-traded products, and tokenized money market instruments. 9Point Capital is a part of Ticker Limited and is mentored and coached by Mr. Jignesh Shah. 9Point Capital, India's first digital assets management company, reserved for the visionaries.
How was that? Yeah? Very revealing, right? A lot of insights into this asset class, right? So as we continue these sessions today, I really hope you get a lot of information that you can digest today and get that conviction to join us, as I said, in this journey. So I'd like to call Jasmeet back onto the stage, please.
Thank you, Srini. That was really inspiring. As we now move on, I would like to welcome one of the most driven and respected voices in investment management. Not only is his name synonymous with great achievements in financial world, but his values and experience too. With a very unique take on market movements and futuristic opportunities, we'd now be welcoming Mr. Rishi Kohli on the stage with us.
Thank you. Good evening, everyone. Thanks to 9Point Capital, Srini, Saurabh, and rest of the team. Yeah, this is a little bit about myself and my background. Actually, I should maybe show you this first. So, been in the markets from 2001 and largely focused on new things in the Indian market. 2001 is when the Indian equity derivatives market started. I was among the initial people in the institutional derivatives broking there. Did a few market firsts in terms of the large FII option trades into the Indian country and other larger hedge funds and prop desks of banks, getting them to come into the Indian derivatives market. Post that, actually joined hands with a US hedge fund called Monsoon from 2007 and 2008 onwards to apply some of these quant principles to the Indian market from the buy side. There were no quant and systematic funds actually in India at that time. Even now, it's a very, very tiny part of the market, but growing now over the last few years. So took that initiative to start the quant fund for India in 2007-8. Post that, also started the first managed futures fund in Asia in 2011-12 period. So a lot of these things, were very new for India, for Asia, etc. And it really helped both, of course, the firm as well as the investors in these new products. So this is more to sort of related to what was just shown, that, crypto, Bitcoin, whatever initiatives 9Point Capital is taking, that can add a lot of value, because only when there are new developments in the market or there are new instruments, there are a lot of opportunities there, and if those are tapped into at the right time, then it can really add value to portfolios. So that is something that I wanted to highlight because of the background of basically trying to do market firsts across the years. Little bit more on the background is that long back how I got into the space was that in Indian equity markets, even till today, largely, people say that, okay, equity markets are going up and we'll make returns, right? But what if markets go down? What if markets go sideways? Then what happens to the portfolio? So the initial motivation for me to start doing quant and systematic and start looking at these new opportunities in the market was that, why can't we make money when markets go down? And why can't we make money when markets go sideways, right? And that is how the derivatives and the options world, and then applying quant and systematic models on that, came up. So, for example, in a year like 2020, even in March 2020, COVID month, when globally markets fell, certain strategies we were doing actually made money in that month, right? So why is that not possible? That is possible if you obviously adopt some shorting strategies, which we do in the derivatives market in India, but also by having some smart asset allocation, that is possible. And that's where probably, crypto and some other new things can come in going forward. So that is the broader thought that, I wanted to highlight. So as, many great investors globally have said, diversification is the only free lunch. And some of us professionals who have been active in the markets for a long time know that is true. Now, diversification can be of many types. I've shown some types here, which is strategy, factor, and asset class. Obviously, asset class diversification, in fact, is the most important. It seems the least important, just from a human psychology point of view. But actually, there's a lot of global academic research which shows that that is actually the most important. And if you get that right, then, stock picking and other things become very secondary. Whereas, as a normal human, you tend to focus on that stock picking part much more than what you should be doing. And that is where, again, the crypto side and the Bitcoin side comes in, because I think it's almost like a new asset class that has come in. And, Srini showed some data in the video around some of that, how it has really grown fast over the last few years. And from my perspective, the interesting thing is that it's got institutional now, right? So till a few years back, even I was very skeptical about it. I've dabbled my hands actually in trading Bitcoin, both directionally and from a statistical arbitrage perspective, with very good results, because the more the volatility, and we'll come to that on the next slide, that is what keeps people away, but that also means there are more opportunities to, harness returns. So being more data driven, quantitative, systematic from my element, anything that has large trends or large moves, whether up or down, and anything that has large volatility, can be very interesting in your overall asset allocation. So that is how I would look at this. Obviously, there are, regulatory angles to what you can and cannot do in India. And that's something even I'll, look forward to learning more about today. But other than that, just based on the price movement and, whatever options we have here in India, I think it can be a very interesting diversification and can be used in many interesting ways. This is something based on my experience, and, I'll relate it to how Bitcoin can be used. And there's some data on this on the next slide. So this is the efficient frontier. Obviously a little bit of math stats, but many of you who have either done finance or discussed or gone deeper into investments would have at some point come across this. What it shows is basically the optimal combination of different assets that make you the most efficient from a risk reward perspective. So basically that pointed side on the ellipse is the most efficient point on that frontier, right? So for a certain level of return, that is giving you the lowest risk, or for a certain level of risk, that is giving you the best return. Obviously, traditionally, portfolios used to have a mix of equity and fixed income, equity and bonds, which goes back to 100 years back. And therefore, that 60-40 portfolio, which is also shown there, was something that globally came to be well recognized, and whether global or India, a lot of people followed that approach. And variations of that, obviously, based on your age, etc., as a lot of wealth planners and wealth advisors would have told you. Now, for a long part of my career, what I did is what was globally called managed futures, which in a very simple way is nothing but, let's say, from an Indian context, applying some simple momentum or trend following rules on, let's say, Nifty futures or Bank Nifty futures or some commodity futures or the currency also. So any of these sort of index futures, if you apply certain momentum or trend following models, you would largely put it under this managed futures category. So I was doing this for a very long time. The interesting element there was that globally, again, some of the largest funds in the world use those kind of strategies. And CME, so this is a chart from CME, which shows that if you add some exposure to managed futures, then you actually become much more efficient on your portfolio compared to having just the traditional asset classes or strategies. So similarly, when you add Bitcoin to the portfolio, actually there is an opportunity to be even more efficient than whatever is being shown here based on the earlier alternative assets. So, I have been focusing on alternative assets from the buy side for 15 years now, and obviously on sort of new instruments and new ideas from 2001 itself. So from that angle, it becomes very interesting because, again, you don't want your portfolio to move up and down just with the equity markets. As I said earlier, that there is an opportunity to make it a little more absolute return oriented or much better return for a level of risk that you want to take, right? And that is where these diversifications come in and these asset allocations come in. This is just the chart of Bitcoin, and you can see it's highly volatile, but having very large moves up and down. So related to what I said earlier, that larger the moves up and down and more the volatility, obviously there's chance to harness parts of that move or harness it in your portfolio by combining it with other things. That should not bring a fear factor into you. That should be seen more as an opportunity, and that is the takeaway from this slide. And then here, again, the efficient frontier that I showed you, and that some allocation to different asset classes can make you more efficient. A simple example of that is shown here by just comparing normal Indian equity market movement represented by the Nifty and Nifty plus 95% Nifty plus only a 5% allocation to Bitcoin, so very, very tiny. But what that does is your 95% Nifty plus 5% Bitcoin, so that small allocation really takes you off the charts. It is obviously much, much higher return. It will come with a bit of higher volatility, but even on a risk adjusted basis, the Sharpe ratios and the Kalmar ratios that are shown there, they're basically a function of return versus a unit of risk, different measures of that. And in both cases, it is still very high. So not only is it higher in terms of overall returns, but also in terms of a level of risk that you want to take, you can make much higher returns. So this is a simple example. Obviously, depending on each person's portfolio, there would be other things you may have in the portfolio, bonds, commodities, other alternative assets. So that percentage may vary, but this is just a thumb rule that, if you have that 5% in the portfolio, then it can really do wonders for the overall returns. So this is a simple example and a simple snapshot on, how it can add value to a portfolio by just diversifying and using Bitcoin and some of these new asset classes. So that's the takeaway that I wanted to leave all of you with. Look at it as an opportunity. Think of allocating some small percentage to it. And obviously within the regulatory landscape, which 9Point Capital will talk about today, what all can be done to tap into this asset class is something we can all look forward to. Thanks.
Thank you, Mr. Kohli. It was such an honor to be able to listen to your thought-provoking ideas. Thank you. I'd now like to invite Srini back on stage to further talk about financial dynamics of digital asset.
Thanks, Rishi. It was amazing. Good viewpoints there. What we are striving here at 9Point Capital is just these two things. One, the regulatory rails that we are building for Indian investors to access this asset, and number two is to bring in a more effective way of portfolio allocation, let's say 2% or 5%. We do have investors who've done 25% also, but that's a story for another day. Yeah. So what I'm going to do now is in the next few minutes explain about the product, right? The underlying product, which is Bitcoin. I'm sure many of you know about it, many of you may not. You might have some doubts. So I'm here to kind of remove all those doubts on this asset class. Yes, just let me put a disclaimer. If you want to see, what is the inherent store of value, that's a discussion we can have for hours and hours. So I'll kind of restrict myself to generalistic explanations and see if you can understand, and otherwise we can have a discussion offline, right? So what we are trying to address here first is the basic definition of Bitcoin as such, right? So what is Bitcoin? Now Bitcoin is if you see music, for example, you had vinyl records first, the gramophones. And then technology came in, you moved to cassettes, and then you moved to CDs, and then you moved to MP3s, right, on the internet. Today, you have music that is born, it lives, and it expires on the internet. So has books, right? Authors, they write, they publish, they earn, they monetize on the internet. A lot of things have kind of moved to the internet, but then if you see money as such, there is no digitally native money available today. That is the premise on which there was an inherent need to invent something that's digitally native from the finance perspective. And that is where Bitcoin came in. From a very simplistic explanation, it is a ledger where you kind of encrypt all your transactions. This ledger is decentralized in the sense there are many people across the network. There are a lot of computers, which is called as nodes in the network, that maintain this ledger, a copy of this ledger. Why this is important is that any change in one part of the ledger is immediately replicated across all the ledgers. So there is no way of any fraud or malicious activity that can be performed on this, right? So that's the basic definition. Now, to increase the value of this asset, the first thing that the Bitcoin founder Satoshi Nakamoto did was to limit the supply. Now, it mimics gold in that sense, because we all know that the supply of gold is very, very limited. It's only, we don't know how much, but we know it is limited, right? But here, the first thing is, the supply of Bitcoin is only 21 million, out of which 19 million has already been mined, and the last Bitcoin will be mined somewhere in 2134. Do we really need to worry about that? I don't think so, right? I don't think any of us would be there to see that last Bitcoin being mined, but there's a lot of financial implications that are going to happen between now and then. So the second thing is, so as I said, absolute scarcity. So that's the first principle on which this asset class is formed. The second is portability and divisibility. You can divide Bitcoin to 100 millionth portion. So that kind of divisibility enables it to be used as a medium of exchange. I would not call it tender, right? Not call it currency. For me, the definition of Bitcoin is it is a property, it is an asset. It can be equal to a commodity, but not a currency. Right? Bitcoin is not currency for us. So that is the divisibility part of it. And unlike gold, where if you need to transfer, if you have 10 kgs of gold and you need to give it to someone else, there's a lot of effort involved in it. But here, Bitcoin is immediately transferable safely, securely to any person, anywhere in this world at any point in time at a fraction of a cost. So that portability is what makes it very unique. And durability and verifiability. So as I said, because these nodes manage these ledgers together across the globe, in fact, the network of Bitcoin, the computers that run the Bitcoin network, collectively is bigger than Amazon, Google and Microsoft's data centers put together. Now that's the vast network that Bitcoin runs on. So verifiability, because it is a non-fungible, immutable record. Once written, you cannot change the entries. So you can verify who is made without any dubious alterations possible there, right? And it is a system of energy, right? Because mining or creating a new Bitcoin takes a lot of energy, and that is what adds to the value of a Bitcoin also. Now, finally, the zero counterparty risk. It's a very unique concept, because today in traditional markets also, of course, there are systems built. We'll not talk about how inefficiencies in the market are creating incentives for people, but as a principle, these today you cannot strike a deal with a counterparty on Bitcoin if that person does not have the Bitcoin to give you. That deal would never even initiate in the first place. So in a commercial transaction, which is what the crypto market is leading into, it is possible that you can have systems with zero counterparty risks, right? So, and as I spoke about divisibility, the main concept that we all need to seek is slow and strategic accumulation of this wealth. That's what MicroStrategy did. For the last 5 years, they have been slowly accumulating Bitcoin at various price points, and they moved their company's market cap to $84 billion, right? So that is how Bitcoin as an asset is defined, right? Now let us see the journey of Bitcoin for the last 15 years. So as we spoke, I have a label. So way back in October of 2008 is when Satoshi Nakamoto kind of came up with this, and he just disappeared. We don't know who it is. We don't know where he is, or even if he's alive. But that's the true nature of a system that he wanted to implement. That's the true nature of this, the mindset that the inventor had, that no one should have control. Completely transparent and completely secure. Now, 2008 is when he published the first white paper. The adoption was very slow. The initial people who believed in it kind of started recording these transactions on the ledger. They were experimenting, but then slowly the adoption started building up on Bitcoin. And in about 2013 July, the price was about $7,000, $8,000, and that is when the first Bitcoin ETF was proposed in the SEC. But at that time, the governments were strictly against it, and they rejected that ETF proposal. And in 2017 was a fantastic year, both positive and negative for Bitcoin. The price just shot through the roof, and it reached $20,000 for the first time. And in 21 is when it surpassed 100 million users. And the crypto industry today, if you see, because there are other altcoins as you saw in the video, today there are about 56 crore users of cryptocurrencies in this world right now. And then in 22 is when we passed 300. Now it is about 560 million users. Now, a very important thing that happened in this entire journey is on Jan of 24, which is when 11 Bitcoin ETFs were approved and launched in the US markets. Companies like BlackRock, VanWeck, Fidelity, all these guys kind of launched the first Bitcoin. And as you saw in the video, the first 20 days, the net inflow was about $10 billion. In the first 3 months, in 90 days, BlackRock amassed about another $10 billion by its own, the fastest inflow into any ETF across any asset class in the history of ETF. So that's the kind of pent-up demand that was there for a regulated asset class. At 9Point Capital, we do not deal with cryptocurrencies. We comply with the law of the land, and we are enabling a regulated rail for Indian investors to access this asset class and providing institutional kind of management into these products. We have our partner ViewTrade. Ronit is here. They are a registered, FINRA SEC registered broker dealer with us. We have set up our broker accounts in Gift City. So we will talk about that. My colleague Sonu will take you through that. But what we are looking at is when when the inception of 9Point Capital happened, this was our founder Mr. Jignesha's view also and vision also, that there are a lot of scams that are happening. It's very technically, very difficult for normal people to access this asset class. There's a huge taxation, and that is where we need to provide a zero-da kind of a experience to our users, or a PMS kind of an experience to our investors. So that is where in 2025, which is this month, we launched our silent operations 2 months back. We've already got fantastic responses, and our AUM has been fantastic till now. But we are officially launching it from this month onwards. Right. So, as I said, if you look at the growth for the first 300 million users, mobile phones took about 21 years, and even the internet took almost about 15 years, but crypto took only 12 years, right? So there's a lot of interest. Primarily it was fueled by the decentralized nature of the asset, that people wanted to have something that does not belong to the government. But then the institutional adoption kind of changed the narrative a bit now, and that is fueling the recent price action also on the asset class. We spoke about the the last 10 years, if you see the performance of this asset class, out of 10 years, 3 years were negative for this asset. But look at the kind of returns on or a growth on a yearly basis. It's phenomenal. But as Rishi was saying, volatility is good if you know how to manage it, right? It's an opportunity. It's not something that you need to fear, right? So just to kind of explain this a little more, if you go into this slide that Rishi spoke about, every year, Bitcoin follows a 4-year cycle. So every 4 years, for example, if that mining that I said, to produce one Bitcoin, there is an amount of effort that is required. So the effort doubles every 4 years and the reward is halved. So it's called the halving. So every 4 years there is a halving that happens. So the amount of effort you need to do is actually 4 times to get one Bitcoin that you're doing today. So that happened last April. Now 3 years from now, again it will double. So it becomes more and more difficult to mint one Bitcoin, right? So, but what I was trying to say here is, if you look at these 4-year cycles, after every halving, the movement of Bitcoin has been tremendous. Every year you see the first halving way back in 2012 was about 334% and the drawdown was about 93%. Now you may say, what is 93% on such a large scale, right? So it's 33,400% in a year. We cannot expect this kind of growth anymore, right? From last year onwards, since the institutionalization of Bitcoin has happened, the volatility has been more in control. It's acting more sane now, right? So that is where Rishi also touched upon this. We saw such huge volatility, but then the risk-adjusted nature of this asset class is much better than any other asset class today, right? Now, how are we trying to implement strategies? If possible, during our FAQs, I'll call our quant analyst, an amazing guy called Parth. The kind of strategies that we build and deploy for our investors' funds are something like this. If you look at the M2 money supply, this is the global money supply of how much the money printer works, right? Bitcoin kind of on a 108-day lag, it kind of completely follows the path, right? So this is one of the lead indicators that we use to invest our client funds into, right? So it's a 12-week lead on the money supply. So if there is a lot of money being infused, which is happening now, you can expect Bitcoin prices to go up, and it's been very accurate for the last 2.5 years, and much more than that also. But we've kind of taken a 2.5 year period. So, what was the turning point or the tipping point for us? It was the launch of the ETFs, the Bitcoin ETFs. So, how are we going to view that as an advantage for us? Bitcoin ETFs, when it launched, BlackRock's Bitcoin ETF is the best in the market today. There's a lot of $126 billion is the total AUM across all Bitcoin ETFs, of which $50 billion is with BlackRock, with IBIT. And that's one of the ETFs that we use in our portfolio. There are other assets also, which are Bitcoin mining companies. There are a lot of strategies that we use, but everything is related to digital assets only. Money market instruments like Hamilton Lane's fund, tokenized fund. Those are all examples of this combinations that we do, right? So the ETFs have also performed fantastic because Bitcoin does that, right? So in the last 1 year, it gave a return of 137%. The first year of the Bitcoin launch, it launched on, actually if you see Jan 21st, 24 is when the first Bitcoin launched. And if you take the returns exactly for 1 year, it's 145%. That's the return the IBIT, which is the BlackRock's ETF, gave. And again, relatively since Trump came, this is the result that Bitcoin ETFs have given. The markets have been very volatile. We all know what happened in the last couple of months, but Bitcoin has been playing it out very strongly. Now, as Rishi also spoke about the institutionalization of this, what is going to happen is one of the very important things that are playing out in the market is, these are all really big hedge funds and very well-known hedge funds that have taken positions with ETFs. But a more important development that's happening is all the pension funds are finishing their due diligence this quarter. And in Q2 of this year, we are expecting more than $300 billion to flow into this market, right? So when pension funds come in, that is true validation for any asset. We've seen it in the past also. So that is a good signal for us to kind of get this conviction onto this asset class. Again, as Rishi said, I'm kind of expanding this into this. So if you have just an example, depends on what kind of assets you have, but just a Nifty 50 comparison on a 1 year, 3 year or a 5 year period, if you had invested 10 lakhs on a 1 year period, your return would be about 8.21%. But if you just allocate about 5% of Bitcoin into the same portfolio, your return would have been about 15%. And a 10% would be 21, and a 20% would be about 35% returns. Now, this is the kind of returns this asset would give. Now, why are we talking like this? It's because, one, we are replicating what's happening in the US. The BlackRock's fund, the 60/40 BlackRock fund, they also did this and allocated only 2% now, and they are suggesting this to their investors, right? So they opened it up last year. So when we do the same thing in India, this is the kind of results that are expected. These are back-tested results though, right? So that is where, now with all these things happening globally, investors are taking advantage of this asset. There's a lot of returns. A lot of people are making a lot of money, but Indian investors are left in the lurch. One, you have huge taxation. You have you need to have the technical know-how to touch this asset. There's a lot of scams. India's largest exchange got hacked for $20 million. That instills a sense of fear amongst all of us, right? And today, if you have disposable income, you just have to go to Twitter or LinkedIn and say, can anyone suggest what stocks to invest? You will get hundreds of advisors coming in with expert advice. But what about this asset class? You do not have that kind of experts in the market today. And that is where 9Point Capital comes in as the go-to place, as India's first digital assets management company, to provide you a solution to all these 4 problems that I spoke about. Number one, the taxation. How do you, just if anyone is not aware of this, the VDA taxation, is very draconian that way, because if today you buy, let's say $100,000 of Bitcoin and you buy $100,000 of Ethereum. Now, if you lose money in Ethereum, you still have to pay 30% tax on the entire profit you make out of Bitcoin. You cannot net off the losses on Ethereum, right? So that is one. The second thing is the 1% TDS. On every transaction, liquidity dried up in 1 year, max, right? Every market maker ran away after the tax was implemented. So there is no liquidity in the Indian crypto markets. So how do we enable investors to get this? That is where 9Point's platform comes into play. So how are we doing this? We are doing it through, we are planning 4 offerings. One is live, the other is coming up in August, and this would be by the end of the year. The first program is in association with ViewTrade. We've enabled the SMA or separately managed accounts where you would be opening your brokerage accounts. Your broker account would be in Gift City, and through LRS you would be able to remit money there. You will have complete control of deposits and withdrawals into that account, and we will have rights to execute or take positions on your funds. And that is where our analyst teams and the fund managers come into play, and we have given some fantastic results in the last 3 months also. So that is the way. Secondly, from an insurance standpoint, the Securities Investor Protection Corporation of the United States of America, every account through ViewTrade, we are enabling a $500,000 insurance on each broker account, which is bifurcated into $250,000 of shares that you hold and $250,000 of cash that you have in your broker accounts. So that's the SMA offering that we have. Now the minimum investment size is 1 crore on this, but initially we are offering it at about 50 lakhs for investors. The second is the discounted broking platform. This, I would say, the Zerodha of Bitcoin, where you would be able to come in, you will be able to create your own account, do your KYC, transfer as little as $10 and take positions on your own, right? So and in this we will also offer all other stocks like Apple or any US stocks. We are also working to bring in more number of exchanges like the 6 from Switzerland, where there are more than 200 ETPs available on cryptocurrencies. The crypto brokerage and the digital asset alpha fund is something that we are working on now. By the end of this year, we would be launching these two. First to come would be the digital asset alpha fund. It's an offshore fund where you would be able to get direct exposure to crypto. There are some legal and compliance issues that we are working on. Once that is done, we should be good to go with that. So the team, if you see, that's me. I'm a hardcore cryptologist, led security practices. I led the security practice for Microsoft and then moved as the head of security for Asia Pacific at BlackBerry, which was Research in Motion. I'm sure you loved those phones that time. Then I moved to Samsung, and then I started my own venture into the finance or crypto finance, I would say, decentralized finance for the last 7 years. I have my certifications in blockchain from Princeton and Bocconi. And Sonu Jain, he's going to come next, but he is our Chief Risk and Compliance Officer, a tax expert. He's built the tax engines for many exchanges, both in India and outside the world. Outside the country. One day that will happen with Elon Musk. Yeah. So, and then we have Saurabh, who is our Chief Business Officer. Has held leadership positions at various companies like Monsoon Capital, Barclays, Deutsche, and recently he was the CEO of Taurus. He's joined us, not Taurus, Taurus AIF. Yeah. So he joined us as the Chief Business Officer, and he's leading our sales efforts or the business practice. And he's been supported by Sabyasachi, who comes from Centrum. He's our West head. We are in the process, a lot of onboarding happening here right now for our north, for our south regions, regional heads, regional managers, relationship managers, etc. So now what I'll do is I'll invite Jasmeet back, and then we'll have a short conversation with Sonu, who will give us the legal and compliance and taxation part of it. Thank you so much for your time.
Thank you, Srini. The next segment of this session is extremely crucial, as we'll be looking into taxations and regulations, the bedrock of any smart financial decision making. To navigate this session, we'll be looking at taxation strategies and regulatory frameworks, and who better to talk about it other than Mr. Sonu Jain, the Chief Compliance and Risk Officer of 9Point Capital. We're now listening to his words.
So I think by now Srini and all the speakers have given us a brief introduction on what this asset class is about, how much money you can make by investing into it. Now we'll sort of come back to reality. So once you make money, the journey till there is very nice. You're very happy you made a hell lot of money, but then you have the finance minister knocking on your door to take her share of money. So like it was said in one of the interviews which happened after the budget, so the finance ministry or the income tax department is like a sleeping partner in all of your activities. So they just want a share of everything that you do. But nevertheless, when we plan our day across various activities that we plan to do, nothing goes as planned. There are always uncertainties, there are always hiccups that keep coming up, which keep bothering us. But there are two things that are always certain in life. One is death, and the other one is painful. But we can try to minimize it. We can try to reduce it, which is the taxes. So when it comes to the crypto industry in India, so there are a lot of issues which Indian crypto investors face. Primarily, some are due to government, some are due to the technology that is underlying all of these. So the very first one that we'll focus on is the crypto taxation that is in India. So you pay flat 30% tax on any profits that you make. So irrespective of you make 100 rupee gain, you make 1,000 rupee gain, does not matter. You pay a flat 30% tax on all your profits. Now this sort of sounds reasonable. All of us are in the highest tax bracket. We already pay 30% slab rate. So what is new in this? The issue is this is on profits before your losses. In the sense that if you're trading in stocks, you make 100 rupee profit in a trade, you end up losing 50 rupees in another trade. Now effectively you would pay tax only on the 50 rupee net gain that you have incurred. But in crypto it does not work that way. So in crypto you will end up paying 30% on the 100 rupee gain that you made. That is because the tax law provides that you will not be able to offset any of your losses. You will not be able to carry forward any of your losses. So in the sense you are taking a higher gamble here, because at every trade you need to ensure you're not only profitable but you also portion out the tax amount so that in the next trade, if you end up losing, you don't have to cough up from your personal wallet to pay for the taxes. So it's a very harsh rule, but that is how it stands right now for direct crypto investing. To make matters worse, they introduced 1% TDS. They told every time you trade, every time you sell a crypto asset, we will deduct 1% of the trade value as TDS. So now effectively for a 100 rupees trade, you will end up paying 1 rupee as TDS. So if you have a capital of 1 lakh, you end up trading 1 lakh across 100 trades, at least 80% of your capital is blocked, because in every trade you end up losing 1% of your capital. So that is on the taxation piece of crypto assets in India as on today, how it stands. The second issue has to do with the based on the technology on which crypto assets are built. Now, crypto assets they function in a very simple way. You use a software wallet to create your own wallet on the blockchain. Now, in this process, the issue stands that when you create a wallet, you don't enter an email ID, you don't enter a password, you cannot use Google to sign in. So when you use a platform provider or a software provider to create your Bitcoin wallet on the blockchain, you are given a string of 12 to 24 words which you need to remember in the exact same sequence in which it is given to you. So if you were to jumble even two of these words, if you were to enter word number 1 in place of word number 2, you will lose access to your wallet. Second issue, now you have this string of 12 to 24 words. So you also need to keep it safe, because any person who has access to these 12 to 24 words can access your wallet and all the funds that remain within it. So there are no security assurances that come along with that. So it is more of a you take precautions, but you also ensure all of your phrases are safe but also in the correct order. So that is the second issue, that not many people understand how to do these things. It is not as simple as Google sign in, but also it's not only about remembering but also storing it. There was a very interesting case in 2010 where a user had mined a lot of bitcoins, almost 10,000 bitcoins he had mined it. But ultimately, the CPU on which these bitcoins were stored was scrapped. Now, effectively, somewhere in 2018, he realized the value of Bitcoin because it touched the all-time highs of almost $20,000. So that is when he started a witch hunt to find out in which dump yard the CPU is kept. Because that CPU is the only one that has access to those Bitcoin wallets, and he did not store those words anywhere, nor does he remember what those words were. Because you can't remember 12 to 24 words in the exact same sequence. So that is the second challenge that comes with direct crypto investing, the technological one. The third and the most important one that many crypto investors in India face as on today is the legal issues. The very prominent example, like Srini mentioned, the biggest exchange in India called WazirX got hacked for almost $250 million. They had assets worth of $500 million as on the day of hack, but they ended up losing half of it in a hack that transpired. Now you would say that a platform getting hacked is okay. It would be fair to say that, because of some issues they would have got hacked. Then comes the second issue. What happened to the remaining assets? So the exchange came forward and told that you don't own any of these assets. The only thing that you have is a claim on these assets, but you don't hold any of these assets. So that again brings into question that when you don't have a legal framework to sort of govern all of these entities, they will end up doing whatever they want with your funds. So ultimately, there are a lot of investors in India who have their assets stuck on the exchange but cannot access it because they are told that the bitcoins which are in their exchange accounts, the other crypto assets which are in their exchange account are not owned by them. So the proceedings are going on in Singapore because India does not have a jurisdiction. The Supreme Court of India told we will not entertain any petition on this. People have to approach the government of India, and all of us, will be aware that the finance ministry and RBI specifically are very against crypto assets in India as on today. So that is the a risk element that comes with investing into an unregulated industry like crypto assets, where you are dealing with unregulated entities like crypto exchanges. Every day we see a new exchange come up, make the same promises, but again at the end of the day we see many go bust as well. So in India as on today we have had 2 exchanges which have gone bust in the last 2 years, including the leading one. So which shows the amount of risk that is there in this sector, but also the professionalism that lacks in this whole sector with regard to customer funds. The fourth and the last one is limited global access. So once we are limited by Indian crypto exchanges, so what next? How else do we get exposure to these asset classes? So there are until now there were no clear guidelines. There was no clear road path as to how an Indian investor could go about investing his funds but still be assured that all of these are safe. People in India as on today use many foreign exchanges, use global exchanges, but still as on today none of them are also regulated. Every alternative week we come across news article that income tax department has sent notices to these people. Many people are found violating India's money laundering laws. Many people are found not complying with India's KYC AML checks. So those are the issues that come with the global access when we talk about that. So that brings us to the next interesting question. So how did we solve it at 9Point Capital? Because these are real issues. So taxation is one piece, you can solve it with smart structuring, but how do you solve the legal issues? How do you convert an unregulated industry into a regulated one? Because ultimately that is what drives trust of a user. In an unregulated industry, you can go without any penalties by making fake promises. But in a regulated industry, you go by the checklist that is prepared by the regulator, you tick all the check boxes, and that is only when you are called a compliant entity. Now, at 9Point Capital, the first thing that we have done is we have given you tax efficient investing into crypto assets, that is through Bitcoin ETFs and other digital asset ETFs. So all of you will be wondering, what makes it tax efficient? How are we avoiding India's 30% tax rate? How are we avoiding the 1% TDS that comes with all of this? It lies in a crucial piece of India's tax law. So when we read the tax law, it says that we'll apply the VDA tax only when you transfer a virtual digital asset. So which is a fancy term for Bitcoin and other crypto assets, which the tax department likes to use. So when the tax law requires you to transfer a VDA to fall within the tax law. Now the transfer would mean that you hold one Bitcoin and you transfer it to me, you transfer it to your friend, you sell it to someone else. A Bitcoin has to go from one place to another for the tax law to trigger under the VDA taxation scheme. But with ETF, none of that happens. A ETF is basically a tokenized instrument where the ETFs are held by the fund manager. So we have BlackRock's IBIT, which holds the Bitcoins in its vault, and then the shares are issued to be traded into the market. Now once that happens, you are no longer trading in Bitcoin, you are just trading into a unit of that Bitcoin, which are tokenized and listed on a stock exchange for all of us to trade. It is not very different from the gold ETFs that you have in the market, the Nifty ETFs that you have into the market, or many fund managers also have their own version of diversified portfolio of ETFs. So the benefit which you get with this is that then you fall under the regular taxation scheme that applies. So we'll come to that, but it's a very favorable one. I'm sure all of you will like that. The second issue, because tax we have solved it, tax was the easiest part of the puzzle. The second one is the regulatory challenge. So how do we convert an unregulated industry into a regulated one? So that is by using India's GIFT City. So we have seen that the government of India has been very vocal about promoting GIFT City, has been very vocal about helping investors to come to GIFT City, invest from there, set up your funds, your bank account, everything from GIFT City. So that is where we have leveraged GIFT City broker ViewTrade, who is our partner. Through them, we open all our investors' account in GIFT City, and through that, everyone gets access to US ETFs, which deal with digital assets. So like BlackRock's ETF, and then you have many other digital asset ETFs that come up. So now what has happened is, if you were to directly buy Bitcoin on any Indian exchange, you would be exposed to the regulatory risk, the legal risk that comes with it, and then the taxation risk. But with 9Point Capital, the pathway is very simple. You open up our accounts in GIFT City through a GIFT City regulated broker, which is regulated by IFSCA, which is the local authority there, and then you can get regulated access to all digital asset ETF that exist across the world. That is on the regulatory side. And then coming to the investment platform, like Srini mentioned, we have two products. The PMS part is called the DIAS, where we help you optimize your portfolio to secure optimum returns. And then we have the DIY platform, which is for traders who would want exposure to not only digital asset ETF, but a plethora of opportunities that exist within the US market and otherwise. Last but not the least, one additional points of assurance that we give is the $500,000 insurance that comes up with our brokerage account. This is offered by SIPC from US. This is crucial because of the WazirX case. So WazirX just turned up one day, told that it got hacked, and then told you don't own any of the balance funds that are in your account. So we don't want our clients to end up in such a situation. That's why we have a $500,000 worth of insurance, which covers $250,000 in stocks and $250,000 in cash. So that is insured for all brokerage accounts. So that is an add-on insurance that is given, so that even in a regulated industry, you have a top-up layer of protection. Ultimately, again, we have introduced 9Point Capital. We are the first digital assets management company who have sort of providing you a regulated access, but also while ensuring it is tax optimized. This is a very important chart which bifurcates our offering with the direct crypto investing. So if we were to see, if I would invest directly into crypto assets, I would end up paying flat 30% tax. I would not have the benefit of offsetting any of my losses against any of my income. Now it does not matter if I have a loss within the crypto asset or I have a loss, in some other asset. I cannot offset it with my crypto income at all. It is basically like a separate calculation that happens, and it is taxed separately. But when it comes to the ETF, in ETF you can offset your losses, you can carry forward your losses. So that is a benefit that you get. So if you were to invest into a Bitcoin ETF, if you are scared of volatile and you want to get out within a short span of time and you end up losing money, you can be rest assured that you can still offset it against your other gains that you would have, whether be it in stocks, be it in your futures and options, so anything for that matter. The third and the crucial one is the TDS. So in crypto trading, every time you would end up paying 1% TDS on every transaction that happens, but with ETF none of that applies. Again, because you're not directly trading a Bitcoin, but you're trading a unit of Bitcoin which is secured by the fund manager. And the last one is the LRS. So the difference is that in crypto investing, you can just register into any unregulated platform, open up an account, fund your account, and then start trading. But here, because it's a regulated rail, you take your money into the GIFT City broker account through the LRS scheme of RBI. You get a limit of $250,000 per year per person to transfer to your broker account. You can utilize that. It can also be clubbed for a family of 4. So you can club the limit across all your family members to invest. One drawback of that is you also have to pay TCS, which is refundable or adjusted against your tax amount when you file your taxes. So that covers our taxation and regulatory piece for 9Point's offering.
Sorry, once again. Thank you, Mr. Jain. You have immensely helped us with such an informative take on wealth management. Thank you. After exploring the legal landscape, we shall now move forward to the business engine of any organization, that is sales. Mr. Saurabh Bhushan, a very sharp and strategic mind, will share his key insights on driving sales growth and distribution at 9Point Capital. Along with it, he'd also be sharing his valuable perspectives on DIS. We shall now welcome him on the stage.
Thanks, Ismail. Can you put the collar mic? Good evening, everyone. I'm the last speaker. The good and the bad part of it is, the good part is that speakers before me, Rishi, Srini, and Sonu, have technically covered the landscape, have covered the offering that we have from the company. So the moot point is, what do I say in my speech? So I will give you an interesting story. All of us are here, I would say we are all curious here, right? We have come to explore an asset class which is new, emerging, and is of present and future. So before we start looking at present and future, I will like all of us to step back and look at the past and the path that we have taken and the several milestones we have covered up till now. When I started my career almost 2.5 decades back, we had just seen the dot-com crisis happening. The bubble had burst, and whenever we used to go to meet clients, the general discussion that we used to have was, boss, equity is a speculative class. It's a speculative asset class. We don't want to put our money. We have seen the asset class come down, crash in a very short span of time. We would love to be into bonds and FDs at that point of time. One of the other very interesting conversations I remember is, in 2001, 2 and 3, we used to go and do several sessions across India with a lot of investors, making them understand, and that time for that matter, even the distributor fraternity that we had, in terms of explaining what mutual funds are and their benefits and what FDs are. It was as lame as that. Today everybody understands and that jargon goes, mutual fund sahi hai, right? All of us know that. Most of us would be investors also in that. At that point of time, there was another phenomenon that we used to see in, and we used to talk a lot about these things. Whenever there was a event happening in the US, and we popularly in the market used to say कि boss US को अगर छींक भी आ जाती है, then we had to take and go into a high fever kind of a situation, and either paracetamol or Meftal used to be kind of used to bring the engine back into track. So we have seen a lot of things in the past where the asset classes were a no-go at that point of time because our immediate experience was not so good. But over the years, with lot of education coming in from the industry, the regulators putting in a lot of effort, SROs like your AMFI coming out with those beautiful campaigns of mutual fund sahi hai, kind of instilled that thing that okay, equity is an asset class to be in, and over the years, people who have invested into that asset class did see the money compounding in. So the magic of money compounding over a very long period of time with the short blips that we have seen. So for example, Srini was playing that video of Lehman crisis. My portfolios also went down by almost 50% at that time. Very short span of time. But it did recover and we made huge money in those 20-25 years of our experience into the market. As markets progressed, as we as investor, as a community progressed, so from equity being a no-go asset class, we started to move towards instruments like your PMS, structure products, AIFs, and so on and so forth. In between there was private equity funds which then moved to AIF as a structure. I was also heading a large single family office, and during that period, while we would take exposure to these things, since the maturity came in and we saw our experiences coming to a fruition and started bearing fruits for us, and with speakers like Rishi being there, people started to talk about commodities, hedge funds, derivatives, and so on and so forth. So the portfolio started to expand from pure long-only equities to even the shorting capabilities and the things, the beautiful things a shorting can do for the portfolio. So when I was heading the family office, we not only used to take exposure to commodities, structure products, PMSs, AIFs, private equity funds, unlisted space allocation to unlisted companies, we also started to venture out to overseas instruments. So for example, through the LRS route, we started to take exposure to direct equities overseas. So all that Srini showed, Apple, Alphabet, Meta, and so on and so forth, we would start taking exposure there. Additionally, we also moved towards leveraged debt products that was there because it gives you fantastic returns. In India, you don't have leveraged debt products that are there in existence. Now the problem with all this is, and all of us investors at some point of time, in the event of coming to that efficient frontier that Rishi was showing, how do we diversify more? We have seen all these instruments, we have laid our hands into it, experienced it out, and understood this space. If we keep investing into these instruments, they will diversify your portfolio to a certain extent. Beyond that, what? So in the event of looking out for these new asset classes, all of us would have come across Bitcoin as an industry or crypto as an industry. But as myself as an investor, and I'm sure that's the case with most of us here, most of us would have shied out in terms of taking exposure into this particular asset class. Simple reason being, it's an emerging asset class, and as is the case with any emerging asset class, talk about equities, talk about bonds, any asset class, it takes time to settle down. For the functionalities to become robust, everything to become spick and span, it takes time. So most of us were shying out from this asset class, thinking, boss, what happens on the regulatory side? Taxation, what is the impact? Will my entire portfolio be taxed in an unfavorable manner? As Sonu mentioned, the exchange had issues. Safety then becomes a big issue. At the heart, whatsoever risk we want to take, we don't want our principal to get eroded away, right? So safety was a big concern. Another large concern was the liquidity aspect of it. We have invested, and if we want to exit out of it, is there an option available? Will the exchange allow? Will the instrument allow you to exit at the right point of time? Nobody had a clue about it. At 9Point Capital, as my earlier speakers, Srini and Sonu kind of touched upon, and that's where I said that everything has been spoken on the offering, we provide only these 4 factors to our investors. The factors are that it is a highly regulated instrument. You are going through a gift city, and SEC overseas is looking at the entire aspect. So it's regulated. It is safe. There is absolutely no problems on the liquidity side of it. The taxation is favorable. So on 24 months, if I'm not mistaken, 12.5%. So 12.5% is what is charged to the investors over a 24-month time span. Added to that, there is a $500,000 insurance that is there to safeguard the investments. So all I will request here is, we have done this with mutual funds, PMS and so on and so forth in our journey over the years. What we shall be doing at 9Point Capital, I'm sure this is the first of the events that we have held it here. We'll be doing many more series like these and also webinar where we speak with our partners and clients alike, make them aware in terms of what this industry is. What as a leaving thought I will say is that this is an asset class which you should be looking to add on to your portfolio. It's absolutely uncorrelated to the existing traditional asset classes that you may have in your portfolio. It will bring your portfolio very close to the efficient frontier, which if it is not there, it will only improve the returns over the risk that you take. And believe me, 10 years later, we will all again, hopefully will meet in a similar environment. You will all say that if we have missed the bus, that we have missed it badly, because this is the asset class which will add a lot of returns over a long period of time. Short period, please do not take any exposure to this asset class. This is an asset class which needs exposure at least for 3 years or above than that. Like we talk about equities, 3 years and above, take exposure. This asset class, if you have a time frame for 3 years and above, please do come to this asset class. The entire sales and marketing team of 9Point Capital is here in this room. Any queries that you may have on the offering, on the asset class, Sonu, Srini, our entire sales team is here. Please reach out to them. Have a heart-to-heart conversation with them. Any queries that you may have which is still unanswered, you will have our cards and our coordinates. Please reach out to us. I encourage you to do that, because I am learning this asset class. I'm still very naive, very new into this asset class. I'm sure each one of us will go through the same journey. Some of your learning curve will be faster. Some of us, like me, the learning curve is flattish in that sense. I take a longer time to learn, but the learning part will be there. So I will welcome all of you to be a part of the learning process that we are instilling to the entire fraternity. So with that, I will leave it back to Jasmeet for the next round. Thank you.
Thanks, Saurabh. That was really enlightening. Okay. I'd like to thank all of you for being patient and listening to our speakers and some of the best business minds we have today. We'd now be conducting a Q&A session, and our speakers would be answering your queries. I request all of you to raise your hand if you have any questions, and one of my colleagues will bring the mic to you. Let us proceed then. Srini, thank you.
Few more minutes, that's it. I know it's a Friday night. So any questions, anyone? Should we just end and start the bar? Yes, please.
Hi, hi. My name is Chintan. I have a question. I think आपने बताया था कि all the place where the bitcoins are being held, the data centers are 3 times bigger than I think some of the tech firms you mentioned about. The thought that went to my mind at that time is who actually bears the cost of those data centers?
So, okay, the way this economy works is just like gold and its miners, right? How you mine gold from earth and you sell it to the market. So, there are business houses. One of them I would say is Marathon Holding. You can look them up. They are a listed company in the US. Now, Marathon Holding runs these mines. Now, these mines are huge data centers running GPUs or very heavy processing units to calculate and solve a cryptographic problem so that a Bitcoin can be mined. Now, when they mine, a new Bitcoin comes into existence and this is then sold into the market. Now, as the difficulty increases, it becomes more and more difficult and lesser Bitcoins will be mined, and because there is a lot of demand for people wanting to buy the Bitcoin, the price shoots up. That is the price action that defines Bitcoin. I hope that answers your question. Yeah.
Thank you.
Hi.
Yeah.
You said that crypto is practically happening immediately, but from what we hear from the news is that it's taking 15 to 20 minutes to revalidate all the past transactions. So do you really think that the value that crypto brought initially will still continue, or will it just be a store of value?
You want to take that? You have this.
So I think a very good question, because when we talk about Bitcoin specifically, among all other blockchains that exist, one common issue that is always highlighted is the 20-minute block time that is always taken to process a particular transaction. More so because blockchains are right now, seen from a perspective of immediate settlement when compared to how long it takes in banks to process international transaction between 3 to 7 days, whereas blockchain take, the recent ones take almost instant settlement. But with Bitcoin, it continues to do it at 20 minutes. There is a specific reason for that, and that is the computation that goes behind it. So every miner, when he puts those amount of resources, so that race to who finishes first, that is conducted within these 20 minutes. So that sort of make sure that the computational difficulty is increasing with every block that is mined, but also the race is becoming more and more competitive to do it within that time limit. And that is where, as the difficulty increases, we find that many people will have to put up a lot more resources, which also increases the cost. That means, that the cost, demand, supply also comes into play at that perspective.
There's also another interesting fact that we all should know. While Bitcoin, you could look at it as a settlement layer, right? But then there are layer ones that are being built on top of it. Lightning Network is one of them, where it enables batch processing, where the layer 1 takes care of settling it for the moment and then doing the final commitment at ease with the 20-minute block on the layer 0, which is the Bitcoin's blockchain. Now this is one. The second thing is, though we are not advocating about the currency use of Bitcoin, but it is happening in the market. If you look at the AI agents that are coming in, a lot of organizations are implementing AI agents to autonomously execute a lot of work, especially in the marketing and the sales departments. Now, when this happens, when two AI agents are talking to each other and executing job works, they need to get paid. Now, for this payment to happen, the AI agent needs to have a PAN card and an Aadhaar card to open a bank account, which is not possible. And the only way to do that right now is the use of cryptocurrencies. So there's a lot of use cases that are building up. Think of yourself as living in 2000, right? And you have Amazon's, Google, Microsoft, all building up infrastructures for the years to come. And that is what is happening in the AI space and in the blockchain crypto space. These two worlds are merging and a new economy is being created, and we need to be at that cusp to grab this opportunity. I hope that answered your question. Any other questions?
Yes.
Yeah.
This side Rishabh Jain. I'm the co-founder of Stock Era, Stock Advisor IAP. My main question is, we are hearing such questions regarding cryptos, currencies, assets class, ETFs, negative, positive, pros and cons. Still, US economy treasury is accepting cryptos in their treasury funds. I've just calculated it, 0.85% is allocated to crypto assets in their treasury. It's a, I don't know, it's a small amount, a big amount considering the whole math. What's your call over it? Being this asset class a volatile class, yet questionable class, people or government is regulating in India currently, or mainly in other countries also. What's your call over it, firstly? I have two questions more. So first is this.
So I think questioning the asset class and its impact of US adding is a common question. We have been seeing it since 2017 when I first entered the markets back in 2017, the crypto market. So that is when Bitcoin touched its all-time high of almost $20,000. So the question is not new, but a lot has changed from 2017 till date. So if we just roll back, so 2017 RBI banned banks from engaging with crypto crypto exchanges. 2018 the ban was lifted by Supreme Court, and till date you don't get easier banking access if you do any sort of crypto business. That is the Indian regulatory environment. But globally, capitalists who understand what crypto asset is, what Bitcoin specifically is, because it is totally different from all other cryptocurrencies that exist. Bitcoin is the only blockchain that has remained as a means of holding it or transferring it between people. All other blockchains that have come up have some sort of programmability where you build economies on top of it. So that is one part which makes Bitcoin unique, in terms that it is difficult to mine, which means it is scarce, but also the increase in adoption that is taking place. So in 2017, no institutional was owning Bitcoin or any crypto asset for that matter. And today, as we stand, we have almost 20 states in US planning to create Bitcoin reserve. Trump believes US will pay off its debt by using Bitcoin reserves, but also we have many European countries who have started looking at it. Now, the issue that happens when all of these people come together and think of allocating their treasuries, allocating some portion of their already existing billions and trillions worth of portfolio, is that the amount of Bitcoin that you can acquire is just so small. There are only 21 million Bitcoins, and then we have 8 billion people across the world. So how many Bitcoins can you really accumulate? Who gets there first and who acquires the most? So that is where US wants to be the leading economy to do that. The strategy is similar to what MicroStrategy deployed in 2020. So ultimately, whether it pays off or not, is a call we need to take.
Also, while you are saying that, it's 0.83% of allocation for Bitcoin only, I would say, wow, because that's the start. When did we see a government reserve happening for Bitcoin? That's a great, fantastic development in the Bitcoin or in the crypto world. He's asking another question. Uh-huh.
Being the volatility of Bitcoin, the US government is currently on 6 trillion of debt. You mentioning US economy is aiming to clear off some percentage of debt through cryptos in future with valuation. Being crypto volatile currency, not yet questionable from many other countries, HNIs, people, institutions. How is this happening? First, second thing, main question, prima facie, why government is the treasury is accepting this volatile set class? Just wanted to ask one question: what is the average downside volatility of Bitcoin? Mainly Bitcoin, because this is the let's say the large cap of example. What is the downside of Bitcoin volatility, and what was the upside on an average of 10 years, a decade?
So let me call Parth, our
Sure,
quant
sure.
analyst.
Yeah, so the volatility on the downside for the last 5 years, the dip which it took was around 72%.
22?
Yes. And it also rallied back close to 3x from that low. So, yes, the volatility is high, but you get rewarded with exceptional returns on that. That is what the Sharpe ratio is. So, the Sharpe ratio on Bitcoin is close to 0.9. You compare that with the Nifty, which is around 0.6. Traditional assets has a Sharpe ratio of close to 0.6. So, in that sense, the volatility is a good thing if you are getting rewarded accordingly on that. So that has been the case for Bitcoin for the last 10 years. For the last 5 years, the CAGR has been 60%. So I don't think it will happen that in the next 5 years the CAGR compared to Nifty or traditional assets, which has been 10 to 11%, will come to that. The volatility will subside with time, but it has been yielding very good returns for the risk taken on the money.
Is there any asset class with the same volatility any government is holding apart from Bitcoin or the crypto?
Well, at least for the last 1 week, Nvidia's volatility is much bigger than Bitcoin. Yeah, but then no. See, look at it is in a combination of volatility and the Sharpe ratio, the risk-adjusted returns. So that way, if you see with a higher volatility, you do have a higher risk-adjusted return. So
it's coming on the second question. Recently, I have attended a such coin, let's say not a competitor, a such coin.
Coin switch.
Coin switch.
Coin switch. Oh, okay.
Yeah.
The reversal. So I have asked the same question. The panelist was not able to clarify my question.
Oh, okay.
I was not satisfied. I'm trying with you.
Are you satisfied with ours?
After third question.
Yeah.
So my question is, there are many unregulated entities rolling in in the global market, including India, which accepts and give leverage and margins on cryptos, commodities, indices, Indian indices, future indices, or let's say global indices. I have an app, I'm using it, I'm getting 20x of margin, I'm buying Apple, I'm buying Nvidia, I'm buying crypto, I can buy many other cryptocurrencies, I can buy options, I can do features. I don't know how it's happening and where is SEBI here. They have their office in Andheri, okay. They're doing kulla 20x margin on indices, cryptos.
Yeah.
How it's happening? I mean, do you think this will happen in legal format or with you any times? Not 20x, obviously, 2x, 3x.
No, rather than me answering, do you really think SEBI will allow this and get a regulation around this? No way. But on a serious note, see, that is exactly what we want our clients to stay away from. And that is why we are putting in so much of efforts to bring in such a regulated product into the market, right? That is dangerous. And see, for all the returns that it gives, we all know the house always wins. You will never make money out of it on a longer run. This kind of leverage. I mean, Yesterday I was reading there's a new exchange that's coming up with a 500x leverage. Even a 0.2% move this side and that side, you're liquidated completely, right? So we would suggest to stay out of, stay away from all these kind of opportunities and invest in stable, regulated assets and platforms that are recognized by the regulators. Right? We can talk about this offline. Let's take other questions also.
Sure.
Yeah. Rishi, you had a question.
Yeah, sorry. The offering is a long only offering. Are there variations? Would there be some timing to, when you invest and when you come out, or how is that piece?
See, currently we are a long only, but we are building up from June 1st. We would be bringing in, we'll have Parth talk about it. But right now it's a long only, and we have a 3-year hold that we would recommend, and we've put in an exit load if at all you want to exit earlier to that. So that is how we are working on that. Right. Any other questions? So there.
Thank you, Srini. So one of the questions that I had was around creation of alpha, right? What are the kind of strategies do you intend to put in place to create some kind of alpha as far as the investment is concerned?
Okay, you want our secret
sauce, yeah, the KFC part of it.
I'll let Parth answer. I think that would also answer your question.
So we look at the leading indicators. So Bitcoin does not move randomly. It responds to a lot of global macros. One which was discussed was M2. There are a couple of more, like the heavy correlation with the large cap stocks of Nasdaq, tech stocks of Nasdaq. Then the high yield bonds and the volatility which we get from the options market. And also the exchange outflows and inflows of Bitcoin. So these are the leading indicators, meaning they front run the movement of Bitcoin. So we try to model them and we get an output as a signal, which, as Srini said, is as we are a long only fund, the signal oscillates between 0 and 1. Meaning, if the signal is 1, we are invested 100% of our portfolio in it, and if it's 0, we are at cash. So we expect the Bitcoin to stay sideways or go negative. Eventually, this is for long only. Once we are able to short and take the benefits of sideways movement as well, the signal will oscillate from +1 to -1, where if it is -1, we can short as well. So everything is automated, and hence it is comparatively easier to scale. So we have been deploying money on this. The returns for the last 5 years of this strategy, where we take in leading indicators, model them, and we tend to take a bet on the long side, short and sideways as well. So the returns for the last 5 years were around 62% annualized CAGR, with a Sharpe of 1.5 and a max drawdown of 30%. So compare that to the Bitcoin. Bitcoin has a Sharpe of 0.9 and traditional markets has a 0.6. So doubling down on the Sharpe. Sharpe means just the smoothness, the time period which we are holding the Bitcoin. Very less. If the Sharpe is high, the amount of pain to hold that decreases. So if you have a Sharpe greater than 1.5, pretty close to the top hedge funds have a Sharpe close to 2. So that makes the holding journey very easy. It's not very volatile, not many wiggles in the equity curve, and helps us to scale that model further.
I hope you got it. All right. So I think any other question? Okay, sure.
Is 9Point Capital will be doing only dealing with Bitcoin or any other cryptocurrencies as well?
So we call it digital assets. because the moment it gets regulated, it's called a digital asset. Right now, we are only focusing on the Bitcoin ETF. There are tokenized funds, like I said, the Hamilton Lanes, money market funds. There are some tokenized bonds. There are correlated digital asset stocks like the Marathon Holding or iHut that I was talking about. So these are all the various asset classes that we make a basket of for our portfolios.
Because there are various other cryptocurrencies in India apart from Bitcoin. And Bitcoin is at very high price right now. Will you be providing the services?
So that is where the divisibility comes into play, right? So you don't have to buy one whole Bitcoin.
Okay.
So depending on the amount that you want to allocate, it's divided. It's divisible by a million times. So that would not be a fractionalization is where the game is for us. And we will not touch cryptocurrencies directly because, as we discussed, that attracts a lot of taxation issues.
Second question for sir is, if we buy the Bitcoin from India, not from Gift City, will it attract 18% GST, right?
No, currently there is no GST on crypto transactions as on today. So
There is
apart from GST on the brokerage that you pay to the platform, there is no direct GST on purchasing Bitcoin.
I think he's talking about direct Bitcoin, crypto.
Yes. Suppose if I buy a Bitcoin, let it through you.
No, we don't sell Bitcoins.
No, you don't sell Bitcoin, but you are in a brokering agency.
Yes,
Suppose
you can
if
buy
I
a Bitcoin ETF.
Yeah. So there will be no GST?
No, there will still not be any GST on that purchase.
Okay, thank you.
All right, I think we are available after this. So I'll finish. I'll finish. So thank you so much, everyone, for coming here. I hope it was a revealing session for all of you, and you've built that conviction on this asset and 9Point Capital. So we are available here after this. The bar is now open for cocktails and dinner. We'll catch and we'll discuss more on this. Yeah, thank you so much. Rishi, sorry, just 1 minute, guys. Thank you so much for coming over. It's been a pleasure. I'd like to just give a memento. Just me.